Hello everyone. Have you ever wondered why people use animal references when talking about the stock market? Like a price market is called bullish, while downtrend market is called bearish. Why is it so? Animal metaphor exist in the stock market because they provide a vivid and relatable way to describe complex market dynamics, investor behavior, and market conditions. It is used to simplify complex financial concepts and make them more relatable and understandable to the general public. Animal metaphors in the stock market serve as a shorthand language that encapsulates complex ideas and emotions in a more accessible and relatable manner. They provide a shared understanding among market participants and facilitate communication about market conditions, investor behavior, and overall market sentiments. First up, we have the bull. In the stock market, a bull represents a rising market, optimism, and upward trends. Just like a bull thrusts its horn upwards, a bull market signifies strength and aggression. It's a time when investors are confident, economic growth is robust, and stock prices are on their rise. Now, let's meet the bear. A bear market is quite opposite. It represents a declining market and downward trends. Bears swipe their power downwards, symbolizing selling pressure. When investors are bearish, they anticipate market declines, leading to lower stock prices and generally negative sentiment. Next, we have the hawk. In the stock market, a hawkish investor or policymaker is someone who advocates for tighter monetary policies or higher interest rates to combat inflation. These vigilant individuals prioritize controlling inflation over stimulating economic growth, just like hawks with their sharp vision and wariness. On the other side, we have the dove. A dovish investor or policymaker favors looser monetary policies or lower interest rates to stimulate economic growth. Doves, like the peaceful bird, prioritize harmony and accommodative measures to encourage borrowing, investment, and consumer spending. Now, let's talk about the sheep. In the stock market, sheep, metaphorically, represent investors who tend to follow the crowd without conducting through research or analysis. They lack independent thinking and simply mimic the action of others. This behavior can contribute to market volatility and irrational decision making. Oh, the wolf. You might be thinking of the famous movie The Wolf of Wall Street. In the market, wolves symbolize aggressive and opportunistic investors or traders who seek to profit from the misfortunes of others. These cunning creatures capitalize on market downturns, short term price fluctuations, or other investors' mistake to generate profits. They embody risk taking and predatory behavior. Now, let's meet the chicken. In the stock market, chicken represent risk-averse individuals who are hesitant to take bold investment decisions. They may have a fear of losses or lack confidence in their investment abilities. Chicken typically prefers safer and more conservative investment options. There is a famous saying, running around like a headless chicken. Next, we have the ostrich. Ostriches symbolize investors who ignore or avoid negative market news or economic indicators. Just like the myth that ostriches bury their heads in the sand, these investors perform to remain uninformed or in denial about the potential risk and market downturns. Pigs represent greedy or overly speculative investors who take on excessive risk in pursuit of high returns. They may engage in impulsive behavior, ignore risk management practices, and become vulnerable to substantial losses. Pigs are associated with a desire for quick profits. Bulls make money, bears make money, but pigs are the one who always get slaughtered. This proverb serves as a reminder to approach investing with caution, avoid excessive risk taking, and make informed decisions based on market conditions rather than succumbing to greed or impulsive behavior. Moving on to the lion. Lions symbolize powerful and influential investors or institutions that dominate the market. These entities possess significant resources, expertise, and market influence that can be impact stock prices, market sentiment, and overall market dynamics. These are the kingpins of the stock market. Lastly, we have fish. Fish metaphorically represent inexperienced or noise investors who are easily swayed by market fluctuations. Just like fish move with the flow of water, these investors tend to follow prevailing market trends without deep understanding or analysis. They may lack experience and knowledge, making them more susceptible to market volatility. And there you have it. The fascinating animal metaphors used in stock market. Each metaphor carries its own meaning and captures different aspects of market conditions and investor behavior. Understanding these metaphors can add depth and color to discussions about the stock market. That's all for today's video. I hope you find it insightful and enjoyable. Don't forget to like, share, and subscribe to